Hello guys, welcome to Sochi Forex. So in our previous video, it was about support and resistance. But briefly, I want to make this video on a special order request. So in this video, we'll be discussing how to buy boom and sell crash. How to buy boom and sell crash. You agree with me that in our general analysis, we buy boom or sell boom in the direction of a trend. Okay, most of the trade we take are in the direction of the trend. We don't trade against the trend. What am I trying to say in essence is that we don't trade against the market structure. For example, on this chart you can see that we are in an uptrend because the market is making a series of a low, a high, and it's making a higher low, higher high, okay, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, which give us an uptrend. And if you go through our previous video, you will realize that for us to pick each of these level, all we need to do is that we'll pick our Fibonacci tool and get the range. For instance, from the first move, we'll pick the range of the first leg, and after that, we use it to time our entry. Just like from where we just fib now, you can see the price come to 61.8, and then we get a rejection from that level. More also is this last move here. Okay, price return to this point, pull down, retrace to this point to 50.0, and then it move to the upside. So trading it structurally, what it means is that after we mark the range, which we have already discussed in our previous video, okay, that is why I'm very fast now. We have discussed that in our previous video. That is how to catch spike. The same principle, the opposite is the case for how to get the drops. That is the crash of crash 500, 300 and 1000. You fib it, you follow it structurally, and then you trade. Everything is structural. But now, perhaps you are in a downtrend, just as we are having here. How do you go about it? Because if the market is in an opposite direction, which is in a downtrend such as we are having right here, it becomes very difficult for you to do that. Because what does that mean? It means that in this downtrend you are meant to be selling. You are not meant to be buying. Because any attempt to buy here, price will continue to take you down. For instance, if you come to this level and you assume that you are in an overbought zone, you realize that price will continue dragging you, and if your capital is not much, you end up closing the trade in loss, and maybe immediately you close in loss, it will begin to spike. And why? That is because you are going against the trend. But nevertheless, there is a way you can take advantage of this and still cash up spikes despite it's against the trend. That is what I want to share briefly. I don't intend this video to be long. That is why I'm very fast. That is what I want to share very fast and very brief. Now, you cannot do it without being able to identify the structural point. So you will begin by identifying the structural point, which is what I'm going to do now. First, we have this first high that was formed. up there. Okay, let's assume that is the high. Then we have this low. Okay, after that we have this lower high. Remember, it's a downtrend. We have this lower low that was formed here. Then here we have a lower high. Here we have a lower low. We have another lower high. Okay, at this point, this is a lower high here. Yep. Another low here. So the question is, how do we trade this since it is against the spike? Now that you know the structural point, please follow me carefully. The rule is that, remember, in a downtrend, the price is not permitted to take liquidity of the upside. What I'm trying to say is, price is not permitted to break the structure, that is, to break this trend line, to break any of the previous structural points. Price is not permitted to break it. So which means that price will come down, will go make a new lower high, form a new lower low, go back, make a new lower high, form a new lower low, go back, make a new lower high, and then it will keep moving in that direction. Anytime you see price taking the previous high out, it's a break of structure and it's a change of direction. Okay, but since you want to scalp, you are scared of going this way, I want to pick only the spike, you must still first of all mark out the structural point. And now, since price will only take liquidity of the lower low, because it's a downtrend, you can see what happened here. Price went up here, come back and take the liquidity of this lower low. So since price is coming to take the liquidity of this lower low, you need to identify the lower low. Then you will wait. Now get the logic now. You identify, price will come, price has already retraced up, so price is now coming down. It will take this lower low. Price will take this liquidity. Now that price has taken the liquidity of that lower low, what is the next thing you will do? You will wait for a full 1 hour candle to close, just as this one that closes there, which has proven that a new lower low is being formed here, even if price used to retrace back, because it has closed below the previous one. Then after you have gotten this particular formation, liquidity being taken here, and then price come down after taking this liquidity, a complete 1 hour candle is formed. It is from that point you now make your buy entry. Okay, after a 1 hour candle, that is the point you will now make your buy entry. And this buy entry, you will now make it on a lower time frame. So you will now move to your lower time frame, right? This is boom 1000 chart now that I just bring up. Okay, I want to take you back. You realize if you come to that point, okay, look at it on 22nd. That is the level we are talking about. It happened 22nd. Great. Here is it. this area, this is it here. On 15 minutes, this is it. So what you will do, you now come to your lower time frame and observe that price is piercing the lower Bollinger Band. So immediately you realize that price is piercing the lower Bollinger Band, you now look at your TDI indicator of your indicator window. You want to see that the price line, which is the green line, this one here, is already outside of the blue line, which is the Bollinger Band. Immediately it is outside the line, you will wait, you don't make entry. It will make the first spike. You'll see that this green line is outside, and then after that, one of these spike happens. This particular first spike happen. So immediately first spike happen and price return back inside the Bollinger Band, you'll notice that this green price line will cross this red line, and then price will close above your moving average 10. You will buy and put your stop loss here. You will buy and put your stop loss here, and then you see how it plays out beautifully. So it is as simple as that. So look at this one too. You will see that here price now retrace and take this low. Do you get? Then after the 1 hour candle that closes here, what follows next is spike. So the next thing that follow up after that is that it begins to spike. And here is that scenario, 24th. I want to bring it up for you to see. Good. Now all of this that begins to happen here is what is happening here. So this thing is simple. Please watch this video over and over again, then you will understand. If you have a question, you can ask the question in the comment section. Do this, the opposite is for a crash. And I believe you are getting value from this video. Please do not forget to like, share, and subscribe to the channel. Thank you, and see you in the subsequent video.